decide what the right criteria is, and then when that opportunity comes, you have to strike, because if you don't, you're choosing to work against your goals.
So welcome to community. We're sitting on with Jared Tendler once again. We spoke a while back. We spoke many times, I think, with Jared Tendler on a podcast here, a trading psychologist, being able to help people kind of get more discipline, get more focused on their goals, and getting better results in trading. So Jared, welcome back on the podcast. Good to have you here today.
Yeah, Dan, good to see you, man, as always.
So tell me a bit more, kind of just a bit background about what happened since we last spoke. I think it's been, I don't know how many months, I can't count, but tell me what's been going on your side of the market.
Yeah, so I'd say, for me, I think there's sort of like got a bit of an explosion, I think, with a lot more traders involved in prop firms, and so I think those prop firms provide a unique challenge. It's not, sort of the typical trading that's, on your own, especially, clients of mine that are the more seasoned, experienced traders obviously aren't dabbling in this, but I've had a number of kind of new people kind of come in who, or I'd say kind of a wave of some sorts that have kind of come from the prop side, even ones that have been successful and then kind of are choosing to go that route just because of not having to use their own capital. So, those prop firm challenges provide a unique challenge in and of themselves, and it seems like a kind of a no-brainer, but on the one hand, it might kind of alter your style a little bit because of the rules that you're kind of now being kind of placed under. So
today I wanted to focus more on especially like trading rules and emotions. A lot of people like set rules in trading. They have a plan, but they have a tough time to respect that plan. They have a tough time to apply these rules in the market consistently. So maybe we can like unpack a few of these things and kind of how that plays out in trading and how we can fix it. But tell me a bit more about like when people set rules in trading, what makes them not be able to follow those rules? Because you could think, okay, if rules, you can follow them, it's easy. Why can't people follow the rules?
Well, it's like the classic quote from Mike Tyson, right? Everybody has a plan until they get in the ring. And at the end of the day, right, like what that means on a trading side is there's emotional volatility that gets created, and it's sort of easy to even blame it as a lack of discipline. And I think that's a little bit lazy. I think you got to kind of peel back the layers and find, right, all right, I'm jumping into this position because I fear that it's going to be the only one of the day, because I see everybody else making money, and I feel a little butthurt that I'm not also making money, and then, or a bit greedy. So there's emotion at play, right? And the same thing, right? I'm going to, cut this profit here because I really hate when a position, jackknifes back down towards my stop, doesn't actually get there, but, I fear that it does. Then I close because I don't want it to have hit my stop. So rather than dealing with all that crap, I'm just going to take this thing out now and make it easy on myself. So again, is that a lack of discipline, or is it really more of like a protection against emotional chaos, or because you actually have issues with fear or greed or overconfidence or anger, right? A lot of the reasons that we don't follow rules, in the live market and the rules that you've spent hundreds, if not thousands of hours creating and or spending learning from other seasoned traders. It's just easy to have all that get thrown out the window because our emotions hijack our ability to follow it.
I know discipline is always the thing that people blame the most. I don't have discipline, I cannot be disciplined, I have to find a way to fix my discipline, and it's tougher to tell them that they have something else to work on. A lot of people, they're able to figure out like what they do wrong, and they're able to like pinpoint exactly like what happens, like what their triggers are basically. But when they go in the market and when they actually kind of go through that, they only see it in retrospect. They see it like maybe a few minutes after they're out of the trade. What makes it so hard when you're in the trade to be able to understand what's going on in your mind?
I'd say it's the same reason why newer traders aren't able to spot opportunities in the market, right? The price action moves too much, right? Zones change, like the profile of a particular trade can change so fast. But as you become more experienced, right, you can sort of see it even kind of before it's coming, or have an idea that it's coming. And the same thing is true mentally and emotionally. And that's why I have my clients, why in the mental game of trading, like the mapping of your pattern is such an essential kind of component here, because you have to be able to create the data points that tell you probabilistically that you're likely to go on tilt, right? That you're likely to get angry and do something dumb, or you're that the fear is rising and you're likely to close a position early or jump in prematurely. I mean, again, it's not causal, but probabilistically, like we can understand certain tendencies within our emotions and recognize the data points that indicate them. And I'll give you one from the book, which I think is quite distinct. A client who would tend to get greedy recognized, and he was a swing trader, right? Recognized that as soon as he opened up his brokerage account to see what the running P&L was, he knew that his mind had begun to get greedy, and he was quite literally like several steps ahead or several steps away from actually making a mistake that would materially impact his trading. But that was the first indication that he had now kind of deviated from an optimal state of mind, which didn't care about the running P&L. He's like, he knows where there are certain check marks that he's going to start to scale out. And until that alert comes through, there's nothing to do. Right? But the fact that he's now thinking about that open P&L means that he's begun to get greedy. So it's like being able to kind of have that self-reflection to say, all right, I tend to jump into positions prematurely when the market's ripping and I'm not involved. So are there any kind of precursors to this? Like, does it matter if you had a losing day, previously? Does it matter if you're in a drawdown? And if you are, well, then you have to be prepared, because any given day, like, the market can rip. And so at the start of that day, you're preparing yourself. All right, you're in a drawdown. Be aware, if the market rips, this is what you're going to do, right? You're going to sit on your freaking hands until you get confirmation. And you have to understand that if you're able to do that, then you got one data point in the position of progress in being able to gain more command of your decision making and ultimately being more, quote, disciplined. But really, you're just at that point kind of managing the emotional volatility better.
I tell people to have their P&L all the time on their platform, but what is it about looking at your P&L that makes it so bad or so against kind of your trading?
Because I think you start to believe that it's yours. It's like, it's not bad for a basketball team to look at the scoreboard and see where you stand, provided that it informs you on like what you're going to do next. Like, all right, we're down by 15. We need to actually kind of change our game plan. But if we're up by 30, like, you don't want to change your game plan too much, because that's where. So here, if you start looking at your open P&L, is that informing you on what you're going to do? Does it feel like you've already kind of won the game, even though the game's still open, right? I think that there's an attachment to that open P&L that makes it feel like it's yours, or you feel really down if it's negative, and then your emotions start to maybe look to manipulate something. You maybe look to get into another trade to try to make up for something. It's I think very difficult for traders to see, and I use the basketball analogy again. It's difficult for traders to see that like singular trades are like the equivalent of like one play in a basketball game, right? It's not one game. If you lose this trade, you win this trade. It is not, oh, I won a basketball game. It's no. You had a turnover, made a bad pass, or missed a shot, or you made one, made a great pass. Right? It's like singular moments in the scope of a long game. Because as traders, to play the equivalent of a basketball game is what? 60, 90, 180 days, depending on how many trades you're taking, depending on your style. Like, to really be able to realize your edge, it's just not like, so it's I think a challenge to kind of view it that way, but it helps to change the nature with which you're connecting to P&L and looking at P&L, because in an intraday basis, it should just be informing you on what adjustments to be made. And if that is not happening, then it's an irrelevant data point.
You would think that, like in a basketball game, for example, people would, like the players would see the score, they would decide like if they're down, they have to do something to get back on track. And traders could do the same thing. They could see like, oh, they're down in this trade, or they have a bad run, a bad drawdown. They could do something to get back on track. Is it counterproductive to think it that way, or is it like a good thing that you can think it that way to go back on the right track?
It is, because it makes you feel like you have to do something special when that's actually distrusting the core of your competencies, right? You're basically trying to feel like you have to do something more when it's like, no, do what you already know how to do. If what you already know how to do is good enough, then just keep doing it, because there's enough other people who are trying to do more that are going to end up doing less. And I know that's hard, But the traders, the players that have the most confidence, the most conviction in themselves, they don't go for the home runs, right? They don't go for the miracle pass or try to force another shot or another a bad play or a bad trade, because they know that their style, their strategy works, and they just need more time. They need more reps doing that.
Speaking of reps, I know a big issue people have these days is patience. Like they don't want to wait for the next trade. They don't want to wait for like not trading. They want to be in the market right away. Tell me how we can cultivate that patience in trading to be more patient and kind of wait, whether it's like waiting for the trades, waiting for the next opportunity, or just like letting things play out to get to our goals over time. Maybe it takes longer than we thought.
Same as the discipline, right? I would put patience in that same category. You have to first rule out that what you're dealing with is not an emotional issue, because your ability to wait can be hijacked by anger that says, I need to make money back now after having lost 2 trades in an unfair, successive way, and that revenge trading spikes and your attempts to be patient are gone. Now, assuming that that's not the case, and right, there's not like big emotional volatility, I think generally speaking, traders mistake their job for being something that is much more like normal, like a regular salaried job where you're getting paid for showing up. Like you clock in and you make money, and you're there, you make money, right? You're paid on your performance. I mean, if we were sitting, just to keep with the basketball analogy, if I was sitting on the sidelines with stacks of $5,000, and I said, all right, LeBron or Steph, like, you make this, you get 5K. You lose it, you got to give me 5K. I mean, the game changes dramatically. But that's effectively what trading is like. You are paid on your performance. And if you're not feeling it right then you can't say, all right, I'm going to take this bet. Like, if you're tired, if you're distracted, if you're bored, if you're like looking for action because you feel like you need to be in the market and have something on, you're not in a good state. And so that is the cool thing about trading. To use a poker analogy, you can sit and wait for aces. You can fold 55 hands in a row and not lose a nickel and wait for aces, right? As a basketball player playing that 5K game, you can wait until you feel perfect and take that shot.
I think there's a very fine line between like staying on the side and jumping in too fast. Like some people they want to be in the market, they take the trades, they want to jump in, they want to be in the market all the time in the action. Some people, they prefer to wait when they have a dot, so then they always like stay on the sideline. They don't take the trades, they don't pull the trigger. How do you balance that out, and how do you get the people who cannot pull the trigger to actually pull the trigger on the trades?
So to kind of figure out what that line is, it is something that you have to define for yourself. So if you feel like you are being too risk averse, then yes, we can deal with that problem. And if you feel like you're kind of jumping in too quickly and a bit greedy or a bit impatient, then again, you have to kind of define that line for yourself, just as any athlete would. If you're being too risk averse, again, let's assume that it's not like a deeper emotional issue, right? With a lot of fear or a lot of weakness in confidence, or sometimes it can be like blown accounts creates a little bit of scar tissue / trauma, and so it becomes hard for you to get into certain types of positions because they remind you of some bigger blow-ups in the past. Let's assume that, again, it's just this sort of more basic risk aversion. I think sometimes it's helpful to calculate the risk of not acting. That, like, if you have goals, those goals are not going to be handed to you, and there is a risk to inaction, right? There's opportunity cost. There's the bleeding of maybe your time, like, and the same in can be used if you're constantly cutting your trade short, right? If you're not holding for 3R and kind of cutting out at 1 or 1.5, like there's a very large risk in that you may never actually achieve your goals. So sitting on the sidelines provides sort of this like cloak or feeling of safety, but in actuality you're sort of sitting in a burning house and you have to make a decision, because if you don't, then your dreams could quite literally die.
What's things you can do to help that? Like, what checklist, for example, helped you to stay on the sideline less and like be more into trades you should be in, or would that kind of be not helpful?
Well, I think the checklist is your criteria. I mean, you're getting into trades that meet your criteria, and I mean, it's not for me to decide what that is. And you can even say, 4 out of 5, pieces have to be hit. Like, that's not, you don't need 5 out of 5 per se. I mean, you make the decision, but my point is, like, decide what the right criteria is, and then when that opportunity comes, you have to strike, because if you don't, you're choosing to work against your goals.
That's a good point. I feel like we got to talk about confidence. You mentioned this a few times, but confidence, is it like area based? Like, is it like you have confidence in, let's say, social skills, trading, or is it like all over the place, like all together? Because I know people who, like, you would think they're not really confident, but when it comes to trading, they're really, really confident, like their ability to perform. So it feels like it has to be like different areas that they're confident in, some they're not, and kind of that's how they work. So tell me more about kind of how that plays out.
Yeah, no doubt. I mean, confidence is, I think, a very wildly kind of misunderstood thing in general. And people tend to feel like they have to have it in order to be successful. And the reality is, you need skill. And if we're talking about trading, you need a lot of skill in trading, proven over a large sample, that your edge actually is profitable and wildly profitable in what you're after. But the reality is that I've worked with 30-year veterans who objectively are less confident than traders that have been trading for 18 months. It's like, well, how the hell can that happen, right? And it's because confidence is really just an emotion, right? We care far more about the skill that you have than the feeling that you have about that skill. And that's a very key differentiator, because people feel like if they don't have the skill, well, then I'm going to go after the feeling. And I'm going to feel like I'm going to be confident. I'm going to have this aspirational, inspirational kind of mode towards me, and it can generate a lot of confidence. But if you suck, you suck. And that's not going to change just because you feel like you're any good. And this is more so true in poker, where poker players look to play against, at least the clients I work with, they look to play against the people that feel like they're good, but actually have no skill. They're called fish. And in trading, unfortunately, it's really easy to make money, and then that can create some blindness to make you think that you're any good. And I've worked with plenty of traders and talked with plenty of traders who early in their career thought they knew what they were doing, and they made, especially some of the crypto traders back in the day, it's like, you're doing nothing objectively right other than the fact that you got lucky to be here in 2016 and you're making money hand over foot. You have no real strategy that's skill-based and reliable, and so it's going to be kind of taken away from you. So that's what happens, right? They have these huge success early, it all crashes and disappears, and then the motivation either is there to actually get skilled or they leave the game. So the point is that confidence is really not what we're after. We're after the skill. What we are after is for the confidence to be most accurately reflecting our skill. We want our feeling about what we have to be accurate. That's what we want. And so, yeah, it's easy for people in other areas of their life to not have much social skill, to not have, much skill with, the opposite sex or whatever sex that they're looking to try to get. I mean, or whatever domain that they're not skilled in. And then here you come into trading and it's like, man, this game checks all the boxes, right? The intellectual challenge, the love of the markets, the curiosity, the fact that it's open worldwide, thousands of competitors, all these different participants, and I can make money from anywhere in the world. Like, sign me up, and I pour myself into it, spend 5 years, get incredibly skilled at it, making a ton of money. Yeah, you're going to be a lot more confident in this thing because you're making money, doing well, skilled. Everywhere else, not saying that you're like doing nothing there, but it may be very difficult for you to develop that skill. So, when you see people in different walks of life, it generally comes down to how they feel about what they have, right, from a skill standpoint.
I think, like you said, people start with a high level of confidence. They go in the market, they have a high level of confidence, and they can make it easily. Over time, they can lose that because they have like losses and things, and as it gets tougher, they have to learn more. And And then they get to like this gap between like the confidence and the skills because they build up their skills, they have better skills, but the confidence didn't kind of catch up. How do you get to close that gap between the skill and confidence over time to where your confidence kind of matches your skills somehow?
Yeah, a lot of it comes from just a lack of recognition of the steps that you're taking along the way, because we're kind of constantly looking forward, and it's kind of tend not to like reflect back on like how the hell did I get here, and I think if you can do that like monthly, you can make sure that your confidence is going to continue to climb up because you're recognizing what you're doing well. We tend to only focus on what we do poorly, and that's not wrong, right? Because that's what makes us better. But so like our motivation stays high and we continue to progress. But as you said, our confidence doesn't really climb in the sort of in tandem, and it's because we're mostly focused on what we're doing poorly, not as much as what we're doing right.
I mean, this is a good point. It's a tough part of being able to recognize what you do well. So, do you have any exercise or is it like journaling you kind of people to be able to figure out what they do well and not well? Or how can they kind of get a good picture of where they're at in trading?
I'd say at the end of every trading session, you could ask yourself these 3 or 4 questions. And it's what I do well today. What can I do better? What mistakes were made? What lessons were learned? And then what can I do better tomorrow? Or how am I going to improve tomorrow? How am I going to take this information and use it going forward? In a way, you're kind of grading your performance. You're seeing holes. You're validating and recognizing progress, and you're thinking about the future because that's what matters most, right? Like the past needs to inform our ability to move forward as aggressively as possible. Otherwise, you end up having to make the same mistake again and again and again, or you undervalue the things you're doing well, and then you forget to continue to do it. And that's one of the things that like is another thing that happens a lot with my clients is they're like, oh, I was doing really well, first quarter of the year. I was waking up early. I was working out. I'd get to my screen like an hour before. I would journal. I'd get my thoughts out, put my phone away, and I'd be really diligent with my pre-market prep. And, at the end of the day, I would make sure I was, journaled all my trades, and like their process is like so tight and like humming. And then like, by April, by May, they're like, oh man, I'm really struggling. I don't know why. Like, well, you stop doing the things that were actually really good for you. Like, this is not rocket science. If you find that there are like things that you do that cause you to perform better, then do them every single day until you find proof that they're no longer working, right? There's a lot of correlation that exists. There's a lot of placebos that are out there, meaning there's these ideas that we can kind of latch onto that make us feel good, that can kind of give us a sense, almost like a superstition, right? Like I'm going to walk around this room, tap this desk 4 times, and that's what's going to help me to win. Like it's not causal. So, yeah, you find things that cause you to perform well, like keep firing.
I'm glad you mentioned this because it's happened to me so many times before where like maybe it's like a few years later you realize, oh, you had this routine before that worked really well for you. Then you didn't kind of keep track of it. You didn't keep doing it. Is it a lack of self-awareness, or what can you do to not get to that point?
No, I think it's exactly what my point just before, which is like if you're asking yourself those questions afterwards of like, what am I doing well? What am I going to do tomorrow? I don't think you fall off track because now you're recognizing the good things that you're doing, and you don't have to like rediscover it in the end of the future. Like, oh, that's right, this thing worked. Let's try that thing again. Like, no, it's like, again, I think it helps with your routine and process, and it also helps with your confidence.
I think this leads us to habits, because then that journaling thing is going to be a habit you got to have for not just like a month or like a 2-week period. You got to have this for the long term. So how do you keep these habits going on for your trading? I guess it's like habit building, but tell me how you see that.
Yeah, you gotta overdo it. I think a lot of people think that's like, oh, look, if I do this for a month, then I'll learn the habit. And the reality is like you can learn things quickly, but you can't master them quickly. So your goal is to get to the point where you can't not do that part of your routine. Your goal is not to establish it as something that you can do. You have to get to the point where if you trade, you can't not go through that kind of post session evaluation. You can't not go through your pre-market prep and your routine as ideally intended. Look, I mean, if something crazy happens, right? There's an accident, somebody gets sick, we of course we're not like holding you to the fire every single time, like it has to be done, right? But barring emergencies, get to the point where you can't not do these things. And I think it's that mentality, it's that idea of mastery that a lot of people, I don't just mean traders, a lot of people miss. And part of it is because somehow in the world, the idea that you could like learn a habit in 30 days, 21 days, 60 days, like starts to just like kind of permeate the way we talk about habit formation. And it's like just completely random nonsense. Like habit formation it varies. I've met people who were able to form like really strong habits in a couple weeks and get to the point of mastery within 60 days. And then I've met people who it's taken them like 18 months. There just was that much complexity to it. Not to what they were asking, but to all the dimensions of their style of trading, all of the internal chaos that they were dealing with. And it's like habits are not sometimes as simple as we think. My point is, if you keep in your mind the aspiration of mastery and getting to the point that you can't not do it, then that's it. Then you just keep working until you get there.
How do you know when you've got your habit like honed down and you're gonna stick to it? How do you know when you're not gonna fall off?
When you're faced with a barrage of like really hard circumstances and you just naturally do it without even thinking. You're jet lagged after a big trip, and that you're going to trade tomorrow, and it just like doesn't even give you a second thought to get to bed immediately so you can wake up early so you can start doing your prep. Or you have like a nightmarish type day, a day that like there's zero chance 6 months ago that you're gonna like spend time like thinking about what you did well or thinking about what you could learn. It's like I want to get as far away from the screens as possible, and you don't even blink an eye. You just sit down and do it as if it was just like the thing that you do. That's the point, right? Mastery is like kind of getting to be like the back of your hand. Like it truly becomes a part of you, and there's a lot of power in that. And so many people again like kind of fill their mind with all this stuff, like all these different ideas for routines, all these different ideas for even for trading styles. And sometimes the simplicity of mastery trumps everything. And and I say that also from a trading style standpoint too.
You've helped a lot of traders who trade for prop firms, and I feel like I ask traders this question who trade for like a fund or prop firm. Some people see it as like they trade capital, and for them it's easier to trade like for a fund or a prop firm because it's not their own money. Some people, it's like more pressure for them because they feel like they have to perform. It's like someone else's money, so they have to be more careful. How do you figure out like which category you fall into? Is it normal to fall into one or the other, or can you is it predicted, or do you just fall into one of these?
I bet it is predictable. I just don't have the formula yet. I think you just have to kind of try it out for yourself and see which category you come into. Maybe it's like this kind of just sprung to my head. It's like maybe if you thought about if you borrowed money from a friend that was like a significant amount, like let's say you borrowed $5,000 to $10,000, like something that was significant. How would you feel about not having paid them back? When you said that you were going to, and if you're able to, kind of judge or gauge, kind of how well you respond to that. Well, then if you hate the idea of being in debt, then maybe that's a good indication that you should not work for not trade under a prop firm. And if you have no problem with it, because they're not asking you for it, it's like they understand that's kind of part of the deal. Then you can kind of go for it and give it a shot.
Can you still trade a fund money or prop firm money if you feel like you don't feel comfortable with it? Can you train yourself to be more comfortable with it, or is it like you shouldn't do it and you should stick to your own capital?
I think theoretically, I believe you can train yourself to almost anything. The question is like, is it worthwhile? If you really, really want to do it, I think to me the biggest thing that has kind of helped, and I'd say mostly poker players, because I worked with a lot of poker players who were part of a stable that they were getting staked by somebody else, and it's kind of similar to this, who were able to kind of get over the hump because they finally understood that it was not their decision about whether or not to invest in them or not. Right? If you pass a prop firm challenge and you get funded, like you have to understand that that firm has decided to take the risk. Like it's not your job to protect them or anybody else. And I think the more you can kind of accept that people do have the ability to make choices for themselves that don't require your protection, you don't have to be like everything for everyone. Can make it a little bit easier.
That's a good point. It's also like a point of expectation. I'm in the same when I talk about like fund manager who've like lost money for a few years and they've been able to get back on track. They were able to like stick to that time of like losing money for the investors without really worrying about it too much. And that's something I think traders could train themselves more to do because sometimes things won't always be perfect. Maybe you don't lose money for like a few years, but at least you can have some down periods. So how do you train yourself to kind of be able to stay comfortable with that kind of mindset?
Again, I think to a degree you have to be a little bit of a psychopath in the sense that you care about what's causal and to know that the market can go through wild times and so long as you're trying hard and doing everything you can, again, people are free to make calculated choices in their lives about what risks they take. And if they've invested in you, then yeah, it's your responsibility to uphold the duties that you've described. It's not your, you're not providing a guarantee. I mean, if they wanted a guarantee, then they should just buy treasuries. And that's what they do. But they're looking, right, to make an outsized return. Your job is to do everything you can to do that. But if you're feeling like the pressure and that pressure is actually forcing you to underperform, well, then you're not really doing your duty. I mean, and I get it's tough. I mean, I've worked with traders in the institutional space, and a lot of times like they aren't going to stick their neck out because they know that if they blow up, they're not going to stick around. They're gone. And if they were actually to hit the home runs that they sense are there with the size that they think they could, they may not necessarily capitalize on all the upside. So, point here is going to hold too with fund managers. I mean, you're not necessarily always going to kind of capitalize on the upside. So there's risk mitigation, right? And I think that's okay. But if you're not happy with your current level of your current performance, then you've got to kind of figure out exactly what's holding you back. And if it's these sort of perceived expectations from your investors, again, thinking about it from their side is sometimes a way to ease a little bit of that pressure.
You're one of the trader psychologists I respect for all the work you're doing for traders. So you want to tell me more about kind of where people can connect with you and find out more about the programs you have and how they can work with you?
Yeah, so jaredtendler.com is my website. I've got free worksheets available there, that kind of fit well with the mental game of trading. And I've got a new program called the Mental Game of Trading Live, which basically gives people access to me on a seemingly like one-on-one coaching. But it's a platform where I'm effectively kind of helping a large group of traders kind of all at once in these strategy sessions that happen 3 times a month. And you can post questions to the platform and I can answer them and get feedback as well from a growing community of traders who are, they're kind of trying to get better in general, but also specifically with their mental game. And there's also a big database of content so that if you've got questions, they're sort of easily to kind of look and find. If you want some guides on how to work through my system for trading psychology, there's lots of resources there to help you. So you can kind of get both the live feedback from me as well as kind of an on-demand library that you can access at any time.
Awesome. Sounds good. We'll put the link below for that so people can check it out directly from this video and this podcast show notes. And appreciate you have Jared. I appreciate it. It's always useful. People get a lot out of it and they really love it. So good to have you here again, of course. I appreciate it.